Well, Bajaj Finance is all set to report its Q1FY21 earnings. Taking a look at what the 18-hour poll sees it around. Well, as far as the net interest income is concerned, we expect an uptick of around 18% on a YY basis to nearly 3,533 odd crore rupees. While the profit would witness a degrowth of around 18.8% compared to what it was in the last year to nearly 970 odd crore rupees. Well, this is mainly on the fact that historically the company has been seeing a strong AUM growth of around 35 to 41%, but particularly looking at the current macro uncertainties and the current macro environment and the kind of tough environment that the company is operating, the AUM growth moderated to 7% on a YY basis for Q1 FY21. Well, this was what the company recently updated as far as the Q1 FY21 performance is concerned. So this definitely reflects that usually the kind of growth that the company has been seeing is not pretty much intact, and the kind of lending that the consumer loans moderation that this lending business has seen is particularly not boding well for Bajaj Finance. Well, apart from this, the management has also guided for a spike in the credit cost even in Q1. So we may see some amount of margin compression, but the outlook going forward is what is more critical, and that is what we are watching out for. In fact, the company did mention and has time and again reiterated that their focus is on strengthening their balance sheet and maintaining liquidity on their books. So this is particularly what the focus area is for the company. Additionally, they also said that managing their operating expenses is quite critical, and they want to obviously maintain a healthy balance sheet on their books. Well, as per the Q1 FY21 update, the company's liquidity position remains strong with consolidated liquidity surplus standing at about 17,600 odd crore rupees as of June 2020. Well, having said that, the another positive aspect has been the number of customers under moratorium coming down. Well, the company did update that AUM under moratorium reduced from 27% in April to nearly 15.5% in June. And despite all of this, they're still holding a very conservative stance, and they have are considering additional accelerated provisioning to strengthen their balance sheet. So right now they're pretty much cautious as far as their lending is concerned. Maintaining balance sheet is and maintaining liquidity is the focus area for the management. But in terms of commentary, we're actually looking as to what the comments are as far as rural revival and demand scenario is concerned. Not just this, what has been the update on moratorium and pickup in collections, particularly in the month of July? What are they seeing on a month-on-month basis? Are they seeing some amount of uptick as far as collections are concerned? Their outlook on asset quality is particularly that we're keenly watching out for as to what are the kind of NPA trends that they foresee going forward, and lastly the kind of margin trajectory that they see. So I think the street is anticipating a weaker quarter, but outlook going forward pretty much remains crucial for Bajaj Finance.